Well, let's get some more on the outlook for the local market today. We're joined now by Chris Weston from IG Markets in Melbourne. Chris, great to see you. Got to ask you about the moves that we saw on Wall Street and in Europe. A real relief rally over the China data, even though it came in pretty much just as expected.
Yeah, good morning, Bridie. I think that was really an exercise in positioning. Clearly, the market have got quite bearish on the number. I mean, this is quite old news now, but I think people are saying that that given the new yuan loans that we've seen and some of the other metrics like fixed asset investment being above 20%, these are consistent with signs of stabilisation, and we should see that coming through into the third and fourth quarter. And obviously, we're going to see a continuation of more reserve ratio cuts and perhaps further interest rate cuts. That seems to be the sort of consensus now, and that should feed into stabilisation. Although we've seen Barclays coming out over the weekend and saying when we're seeing industrial production numbers at 10.5%, this is thematic of a GDP print at 7% to 7.3%. So again, people are questioning the validity of the Chinese numbers. But I think that was one sign. We didn't really see the big move up in US futures until about 11 o'clock though. So I think people are looking very closely at what happened with JP Morgan. The JP Morgan result clearly pleasing the market. The stock was up 6%. The actual core EPS and the reported EPS coming nicely above expectations. But the actual losses we saw from the CIO, the Chief Investment Office in the UK, 4.4 billion in the second quarter. That was quite pleasing. It wasn't too much of a damage. I think total losses will probably come above 7 billion, and they've come out and said that they're likely to see a resumption of their dividend going into the Q4. So clearly the financial sector had a very good gain. That should feed nicely through into our space today. Not too much in the way of news over the weekend. A lot of that really focusing on what we're seeing in Europe. Again, people are focusing what's happening in the Spanish in terms of the Spanish public deficit cut to 56.4 billion. That's going to get a lot of focus this week because Spain are going to come out and raise a reasonable amount of money on Thursday through different bond issuances. That's going to be looked at very closely. And we also have Germany looking to vote on Thursday on the ESM and the actual bank. Sorry, not the ESM, the actual bank bailout coming through, the 100 billion euros, which is going to go to Spain. Reports in the FT this morning are suggesting that it's not a done deal by any means, and we're actually going to see quite a bit of political toing and froing in the German parties there. So, I think all in all, good pop on Friday. We're seeing a little bit of modest moves in the euro this morning. It's up about 11 points. I think the Aussie dollar seems to be the one most in focus today. That's up about 18 pips or so. US futures, though, are down about 12 points or so. So, I don't think it's anything here or there. The weekend news obviously very low, and I think we're going to have a nice pop in the Aussie market on open on the back of that. So
what's your calls? We did see the SPI close up 0.8%, 33 points higher. What do you think we'll see for the open?
Yeah, well, I mean, our cash market, there's actually no dividends being paid anytime soon, so clearly fair value is very low at the moment. So I think, the SPI is a pretty good predictor of where we are. That's where it closed at on Saturday morning. So, that seems to be where we are. If you look at the moves this morning, okay, fine, we've had a nice pop-up, well, I suppose a modest pop-up in some of the risk currencies. But US futures, which is probably a better accurate gauge about where our SPI is going to open this morning at 10 to 10, they're down a touch, nothing too spectacular. So I think an open around 41.10 is probably likely. So it's going to be a good gain on open. The ADR of BHP closed up 1.1%, so I think that's a pretty fair reflection of where that's going to open. Obviously, all eyes on what's happening in China today. China have come out over the weekend and announced that they're going to cut withholding tax. So any foreign profits that are made by foreign companies in China will be, when they take out at the moment, they have to pay a sizable tax. That's going to be cut, as are the dividends. So I think that's going to encourage foreign investment to China. That's going to be something to look at. Japan's offline today as well. They've got a holiday, so that might take some of the liquidity and impetus from our market. And I think you've got to look at Seven West. Seven West is, there's big reports again that we're going to see a 450 million equity raising coming through sooner rather than later. I think the Fin are pushing that. That's something that's been speculated on for a long time. It's largely discounted into the price. And then of course, you've got Whitehaven and Whitehaven Coal. Tinkler made a subsequent offer on Friday. It's taken the market by surprise. I think there have been a lot of people speculating that they're going to pull that bid, and we should see a nice pop on that stock on open as well.
Got to ask you just a bit more detail, if we could, about that Seven West Media. Well, as much as you can when nothing actually has been announced by the company. Yeah, but Dow Jones Newswire is also coming out with similar reports to what the Fin's been reporting, saying that the equity raising will be about 450 million, about 15% discount to the ex-rights price. I mean, what do you think? I mean, you think this is priced in, and you don't think we could see this boost shares then, or the fact that the capital raising will kind of clear the air about the debt issues?
Well, I think this could be a potential buying opportunity once it's kind of sell the rumour, buy the fact type scenario playing out. I mean, you've got you've got a new CEO coming involved. You've got Don Volty come on board. They've reaffirmed their guidance for full year EBIT to be between 460 to 470 million. The consensus in the market is somewhere between that figure as well. So they've got two major situations in place. They've got a good platform to go forward. I mean, the capital raising has been speculated on for quite some time now. It's not going to surprise the market whatsoever. They want the balance sheet flexibility. If we say, we saw a 20% decline in their full year EBIT for next year, that would put some massive pressure on their debt covenants. You'd probably see net debt to EBITDA above four times. So I think that's the situation. I mean, it's been largely speculated. We'll see somewhere between 400 up to $500 million for, as I say, for many months. So I think that's the situation. I think this would alleviate a lot of debt concerns coming through. You've got the new CEO. You've got the confirmation of guidance. You've now got a stronger balance sheet if they come out and do this. They're obviously cost growth are coming up because they're reinvesting in a lot of programs to keep that #1 status going. So I think this will alleviate a lot of the concerns. The stock's down 50% year to date. It's the worst performer in the media space. So I think a lot of this has been down. A lot of the fall we have been seeing is down to the dilution effect that a raising would have. Something like a 5 to 11 would probably be around a reasonable assumption here. So clearly, if we do get one, it's not going to be a huge discount to the price. They would obviously go back and say, well, look, the stock's fallen from the rumours coming through at this time, and they would probably compare the price to that. So I think it's largely discounted, and I think a lot of brokers have actually upgraded the stock to a buy based on the fact that this is discounted into the stock.
I've got to ask you too, obviously, about the clear event risks for this week. We've got Ben Bernanke with his testimony Tuesday, Wednesday. What are you expecting to hear? Do you think, because it certainly hasn't been clear from the Fed whether we will actually see QE3 anytime soon?
No, I mean, we're getting quite a few more differences in opinions. I mean, we saw Lockhart coming out over the weekend. Dennis, he's usually sort of got a medium ground stance. He came out and said a resumption of the asset purchase programme could be warranted if conditions deteriorate. Now, what I'm looking for Bernanke, I mean, if you look at the minutes recently, they didn't provide any kind of clarity on QE3. They certainly didn't suggest they were going to pull the trigger anytime soon. They didn't include the weak non-farm payrolls that we just recently saw as well. So I think Bernanke's speech will be widely watched by the market. I don't think he's going to come out and initiate a QE3 programme. I don't think he's going to give hints that they're looking to do a QE3 programme either. What I want to see from Ben Bernanke, though, is perhaps any kind of benchmark that he would use, any kind of quantitative benchmark from the market to say this is what we need to see to start looking more closely at a QE programme. Perhaps negative job losses, perhaps inflation levels much more below their target of 2% on the core PCE. So I'm looking at targets. If he comes out with them, that will give us a firm idea of how we can benchmark QE3 going forward. But we've got some small bits and pieces in the US this week. Empire Manufacturing. You've got the retail sales numbers. The Philly Fed numbers later on the week will be very, very important because they've been deteriorating, and that's kept the market reasonably suppressed. As I say, in Europe, I think the big one's going to be what happens with Germany coming out and voting on the Spanish bailout. It does seem that Merkel's really fighting an uphill battle, although she should get it over the line because she just needs a simple majority, and then the MOU will be signed off on Friday. So I think that's going to be clearly the important thing. For me, though, a really important situation is what's happening in Australia. You've got the minutes coming out tomorrow, and if you look at how the market's positioned, we're really shaping up for a very exciting rate meeting in August. I mean, you've got the OAS market pricing in about a 65% chance of a cut. You've got 11 out of 24 economists coming out and suggesting we're going to get a cut as well. So it's really finely balanced. So the Aussie dollar could see some decent volatility going into that, namely against the crosses, though.
Chris, we'll talk to you throughout the session. Really appreciate that, though. Thank you so much.